Good afternoon, everyone. You're all very welcome to another weekly market outlook look here at the Alpha Capital Group. So today we'll be looking at just broader dynamics of market reaction over the course of the last week, factoring in, of course, the volatility on both sides of the equation, both on the buy side and the sell side across the different asset classes, and certainly reviewing, I suppose, the reaction in market dynamic into, of course, yesterday's weekly close as well. So, of course, without further ado, really looking at the DXY. DXY has been really the story this week. That stronger dollar witnessed across the board. We've seen gold kind of filter to the downside. We've seen a lot of risk aversion off the back of what is, as I said, very, very strengthening or stronger dollar over the last 5 days or so. It all really kind of came about really from the mid parts of this week, kind of Wednesday, Thursday, we start to see that pickup in dollar strength, and we really see it become a little bit more escalated into the weekly close, where we've gone from 101.40, 101.50 by midday Thursday into really this area up around the April highs at just shy of 103. Now, if you're looking at DXY on the daily, you can see that they're very, very clearly that aggressive swipe in dollar strength on Thursday, and then that follow through on Friday, really to kind of take out the range that we've really been in pretty much now for the last month, since the early mid part of April. So of course, as a direct consequence, what does that mean for the dynamic within the market? Well, we've seen gold obviously filter to the downside. That weakening play in gold is very, very clear and evident now. We've had that swipe, as I said, higher off of the FOMC at the 3rd of May, and that is so far proven to be the highs of the month of May, because since then, with that dollar strength, particularly in the last couple of days or so, we have seen gold prices escalate to some fairly clear downside revisions and price action. So we're really kind of pulling back against that move that we saw, as I said, on Tuesday the 2nd, and that follow through of the FOMC on the 3rd of May. So at this point in time, gold is still very much moving lower. On the 4 hour, you've got that clear order flow. We've got that new lows really being confirmed on Friday afternoon, with a little bit of a tail off again from that 2020 level. On gold, if you're looking at the 1 hour dynamic, again, fairly clear. That initial sweep last week off of the NFP, we got that rally all the way back up into this value liquidity area up here on gold. And really since then, the market dynamic has brought this lower into, obviously, the weekly close. So I suppose the follow through Sunday night open into European and US Open on Monday, it's really just to see, does that follow through continue? So breaking the 2000 level really brings in that pullback or retracement back into this value area, where we're trading all through, I suppose, pretty much the latter end of the month of April, but even since the early parts of April, that kind of 17th of April to 3rd of May, should I say, range. That's effectively kind of where we're looking at. Should we breach 2000, you're really looking at that extra $20 to $30 retracement back into those value areas, and that effectively means that this aggressive break in gold becomes fully mitigated as the price action returns back to this value area. So keep an eye on this week, because of course 2000 becomes increasingly important as a kind of a mechanism for that selling bias, or that break for selling bias. Now, when we look at EURUSD, next on our list is that clear evidence with that stronger dollar. So we've talked about the stronger dollar on the DXY, we've talked about it on the gold prices, but certainly you can see it here in euro dollar, right? We've had that consolidation through January and also through the medium parts of February and early March, around 105, 106. We have had that serious consideration of break all the way up to 110. Profit taking has come in over the last week or so, and we'll demonstrate that now in a 4 hour chart. And of course, that stronger dollar meant that the euro dollar is only going to go one way, and that's obviously back into that range of interest. Now, at this point in time, Euro USD is moving aggressively lower on Thursday and on Friday off the back of that dollar move. And now you're really looking at, well, the oscillating moves in markets whereby price action is two-way inclined, meaning that, right, what goes up must come back down, and what goes down will return back into those value areas. And that's effectively what we're seeing here. What goes up, creating that top formation, potentially creating new lows. You're looking for that kind of gradual retrace against this aggressive movement that we saw really from the middle of March, 17th, 18th of March, all the way up to the highs most recently towards the end of April, and really kind of filtering that back through. So the likelihood is now without a kind of a clear definitive bias, but a stronger likelihood, you're probably going to see euro dollar kind of continue to try and grind higher in the next week or two, most likely back into this 106, 106.50 level. Of course, if you look right, if you look left, should I say, you can see that kind of bottom formation kind of grind higher, accumulates, and now we're starting to break down. I think you're just really looking to sell on retracement, sell on those short-term recoveries, those short-term moves higher, those lower highs for that kind of continuation to the downside. Because it does look now that, at least in the short term, euro dollar is finding some weakness. But that is obviously contingent on DXY continue to pick up. So we saw that strong closure on Friday. You'd really be looking to see now, can the DXY obviously progress out of some of these short-term ranges, maybe break above 103 and create that retracement. And then at least that way, then you've got the broader trend dynamic of that bullish dollar maybe into May, into the end of May, and obviously into the early parts of June, where it does look like now, if you look at even on the wider scope in the DXY, forming that bottom around 101 is something that is becoming a little bit more inherent as we look at the higher time frames as well. Now, of course, if we look at cable, next on our list, again, very similar to what we saw in EURUSD and to a lesser degree in gold as well, that kind of clear trend to the upside is very observant on the daily. That kind of aggressive move higher, continuous highs, forms that top formation, and we're coming back down. Now, most notably, if you look at daily, the daily on Thursday and that follow through on Friday is trying to take at this area of liquidity, this kind of price action structure here around 124.50. So that really becomes the focal point into the early parts of this week. Now, of course, on the 4 hour, dynamic, holding up relatively nicely here at 124.50-ish. We're just closing slightly below that into obviously the weekly close, but looking to see does that become more inherent, because you have this area down here around 123.50, which is effectively saying, well, we've had highs consecutively on the way up, we've had that aggressive new high break of structure up here on the internal side just underneath 126, and that very clear decline back down. So this area here is pivotal obviously this week, but also moreover is this region down here, because it means then that all of this bullish bias that we saw through the end of April and obviously the first half of the month of May becomes completely undone off of this short-term potential wave in dollar strength. And I think that's really the pivotal point to keep an eye out on this week. Just, are we risk on, are we risk off, and factoring that back into conditions as well. Now, moving across to the Aussie. Aussie USD has been fairly range bound all week, has been fairly choppy. You would say up until, as I said, Thursday. So that Thursday was really the pivotal day where we started to see the data slide off the back of obviously Bank of England, and there was data as well in Thursday, but the price action was very, very clear. So once you're focusing on the price action, above all else, that's the most important thing. We've had that slide from the 68 handle all the way back down into the mid 66s, 66.40 as we just close underneath into the weekly close. And you're really looking at this area now because, of course, if you go right, or go left, should I say, you've got successive highs here, you have equal highs here, you have a broadening new high here, but then we've returned back down into this value area. So this order flow has been fully mitigated and fully been cleaned out from a liquidity standpoint, but also as well, we're finding ourselves back into this range. So I think 66, 66.30 is a very, very interesting area to see. Does this actually hold up this week, or do we see further dollar strength? If we see further dollar strength, most likely you've got the potential for a price action trying to break through these wicky areas we held through March and obviously through the early parts or end of April, and really allow for that deeper runoff, because that's effectively what we've been in the last couple of months. Very choppy up and down, trying to make new successive highs. Short time we are, higher time frames we're clearly not, as 68 is held fairly clearly there. So worth keeping a close eye on that as well, because of course if let's say 65.50, 66 really does slip this week, then you're looking at that runoff. You're looking for that continued dollar strength, as we said, and really looking to mitigate all of this order flow that we saw from last November. That aggressive break up in November could then become fully undone as price action navigates back into some of these lows between kind of 62 and 63 on the price action. Now, last but not least in the FX markets is dollar yen. And this is also something very, very interesting. So, of course, we talked about it last week, dollar yen. Those moves higher highs, higher lows continuously, creating this apex formation. So this value area, apex move higher, and we talked about it last week, looking for price action to come back into this move here. We even talked about it over here as well, keeping an eye on this 133.50, 134 level to see what's their clear bounce. And, of course, stronger dollar yesterday, Thursday and Friday, taking out short-term highs here at 135, and it's continued to move higher. So at least at this moment in time, if you are or potentially looking at trading dollar yen, you're most likely having a buy-in bias or bullish bias. Considering that we've mitigated the 4-hour, we've had accumulation here, we've taken out the last little bits of liquidity down here as well on the lower time frames, and we've made new successive highs. So it just becomes a case of, well, if you're not in, you're looking for kind of retracements to see if we do get back into maybe short-term areas, let's say 135 again, to see if that becomes an option. But at this moment in time, there's no real reason to be short dollar yen until we see a kind of a change in sentiment here in the DXY. Okay, because of course DXY breaks through or close stronger, it's bullish dollar, therefore dollar yen is more likely to move to the upside than to the downside. Now, moving across from the gold and the FX play into the commodities, from the commodities then into the indices to finish off the week. I suppose the big talking point over the last few weeks is how, I suppose, range bound and how choppy indices have been. So like the thing is with stronger dollar, you tend to see a fairly clean flow out of stock markets and into obviously safer havens, and you tend to see that clear runoff. Now, when you isolate the price action, not just this week, but over the last, let's say, 3-4 weeks, indices has been very choppy, very sideways moving, and that's been fairly clear, irrespective of the moves that we've seen in gold, irrespective of the moves that we've seen in some of those dollar pairs as well. And that's something to be kind of recognizing of. If you look at Nasdaq, if we go higher time frames for a second, you'll see it in a moment, although the Nasdaq has actually done quite well in the last few weeks or so, very, very choppy, and we've had that slow grind higher. S&Ps, very, very choppy, pretty much range bound. Dow Jones, actually, if we go to a higher time frame for a second, and we'll talk about the lower time frame in a moment, very, very choppy and starting to move lower. So you can see, even though the dollar play has been actually quite strong, the indices haven't been all moving in the exact same way. As I said, Dow Jones has been bearish or slightly bearish. Nasdaq has actually been slightly bullish, and the S&P has just been moving laterally. So it's important to be able to recognize that all of the indices aren't moving the same way that you would maybe expect them to do. And I think that's really, really crucial as well. So if you're trading Nasdaq, you're trading Nasdaq and S&Ps, or Nasdaq and Dow Jones, for example, you're just aware that, yeah, they are both stock market indices, but sometimes they mightn't move in the same way that people expect. And I think that's quite important as well. Now, as I said, looking at the S&P over the last week, we've had swings up and down, violent swings up and down, particularly off of the previous week, off the FOMC. This week, we're pretty much closing the week flat or slightly flat. This is where we kind of began the week, up here around 41.40. We highs this week at 41.50 multiple times. And we've had multiple lows at around about 41.15-ish, with subsequent bounce off on Friday even from 4100. So broadly this week we've been in a pretty much a 1% range in the S&P, 4100 to 4150, and down about 20 points in the week. So we're closing about 0.5% lower in the week. So from an intraday perspective, that's actually quite flat, right? You can fairly deduce that it's quite flat. Now, if you look at, let's say, the shorter dynamics, because of the ranges back and forth, like this was the data on Wednesday, CPI data, where we had that 4.9 against 5. We saw the indices rally. Very, very quickly became undone because, of course, with consolidation, we took highs, we took lows. We then came back up to react from those highs again, both here initially on Thursday, and then a secondary move very, very, very early on Friday morning, 41.50. And then we had that subsequent break of these Thursday lows, and, of course, the Wednesday lows as well, where we've marginally broken through. So just be kind of wary of that. I think 4100 really is your basis point this week. If we see 4100 is really giving way, then you're kind of looking at dialing back up to the higher time frames. You've got an area here around 4050, 4060, which is the April and May month lows, and then you've got these unmitigated areas down here, 3950, 3980. So, like, if we do see that DXY strength continue to pick up this week, whereby we take out 103s, clearly you're probably then going to start to see this filter into weaker indices. You're going to start to see the indices drip off and most likely try and take out these lows and progress back into this region. But of course, let's wait and see how that dynamic goes and plays out. Nasdaq then, very, very quickly looking at Nasdaq, just the aggressive nature in Nasdaq has been truly very, very interesting, because of course with the dollar strength you tend to see risk aversion, so therefore you'd be less likely to see the Nasdaq actually do quite well. And if you actually look left, the Nasdaq has now fully, or almost fully mitigated this move. So this selling move we saw through last August, last September into October, we had this bottom, and then we had this gradual grind all the way back up. It's now fairly close to mitigating this. Okay, so this 13,400, 13,500 level, it's going to be, I suppose, really pivotal this week to see is there any sort of reaction there, and I think that's going to be the pivotal point. It's probably why the NAS hasn't come off, because it's from a price action perspective, it's coming back up to really mitigate this selling bias that we saw through, as I said, August, September, into those October bottoms, where we then had that cycle higher of price action. So this week, if I'm looking at selling on NAS, will be around this 13,500 level. I think that's a pivotal point to look at. And then when you look at the shorter term dynamic, consolidation, new highs, new lows, equal highs again, another short term low, new highs again, another short term low. So we are still creating that kind of, I think, what it could be the final run up higher, but 13.5, this area up here is probably where we could see some sort of reaction. So worth keeping an eye on that one this week to see if there is that dynamical move, because of course as well on the lower time frames the order flow is clear, right? So you've got the range, new highs, back down again, and even if we were to draw fibs on the upside, you can see that as well, right? You can see a 61.8 there on the fibs, and the 276 extension is coming in at 13.516. So it's pretty much spot on with that one. So look, interesting to see if we do get back up here this week, or whether we actually just say, well, no, that's enough. Enough is enough. 13,450 becomes the top, and therefore then we're looking for a break of structure, which is looking at the internal price action to then see are we getting that breakdown, and obviously moving in the opposite direction. Lastly then, in the US is the Dow Jones. So I suppose the Dow Jones is quite ominous, because of course, as we said last week, we had that massive breakdown, the return back up in. We've taken out the liquidity at 34,200. That was very, very evident. We talked about it clearly. We then took the lows. We then came back up into this value area. So this value area here around 33,800 was our weekly highs this week. And then if you look at the 1 hour, you'll start to see nice little breakdown, right? We had consolidation. We had a little bit of a peak on Wednesday, CPI. We then break lower. We come back into this value range. We then come lower again. Another nice retracement, creating another lower high. So we're getting that order flow. New lows, new lows, new highs, new highs, new lower highs successfully. So we're starting to create that bearish order flow. But at this moment in time, we are holding up above 33,100. So if this breaks down, then you're really looking for that swipe of price action to the downside, most likely to continue, whereby then we try and take out the 4 hour lows from the beginning of May at 33,000. And then we have that potential runoff again, because of course, below this area here at 33,000 is this runoff zone, right? You've got this massive imbalance in price action from really 32,000 all the way up to 33. So you've got a lovely kind of 800 to 1,000 point sell-off range potential should we start to take this down. I think that's really something to be very, very conscious of this week. When we see those selling opportunities come in, if they come in, you can really run this position. So be wary of that. Maximize potential, maximize risk reward. All right. So last then is the European indices. So FTSE and DAX, we've had that runoff. So we talked about it last week, the consolidation back up into value area, mitigating new lows. But the order flow now is becoming very, very, very clear, because of course, if we go to the weekly chart for a second, you've got the dynamic of, well, you've absolute highs at the beginning of the year, or February, should I say. Then you've got back into value range, value area, which is around 3,300, 7,300, 7,350. And then we've gone back up again at the end of April, towards the end of April, where we've created that top again at 79. And this becomes a lower high, whereby we've taken the lows of this previous 2-year range almost. We've taken the highs, we've come back into the value area, we've come back up again, creating lower highs. So if we start to break through 7,700, then you're looking at more downside. And I think when you start to look at the 4 hour or 1 hour structure, you can kind of start to mirror that in, because of course on the 4 hour, new lows, new lower highs, new lows, new pullback zone here, and we're getting a little bit of chop and volatility with multiple wicks coming off here at around 77, 77.50, 77.80. And if you look at the 1 hour as well, we've got new lows all the way back up into this short-term value area, and this is coming out very, very clean. And even if you're a day trader trading those shorter-term positions, we've come all the way back up into this key retracement zone. So you're really just looking for this to start to break down. And of course, then you're really looking at applying that logic. So breaking down, really continuing this trend, new lows, and then breaking through 7,700. We've already broken through 7,700 here on Thursday. You're really looking for this swipe, continue, and then you can start to look at 76 to 7,500s, more likely to continue, whereby then you go back up and you say, well, this is where we've rallied up from in the end of March. We've rallied up, we've mitigated this value area, we've created lower highs in the higher time frames as we talked about. We're creating bearish order flow to the downside, which means you've got this potential 200-300 point runoff zone to the downside, most likely coming back in to mitigate this. Right? This area over here around 74, 74, 75, 74.50 becomes quite interesting, considering that we are about 250 points above it. Okay. Then last but not least, then is the DAX. So DAX has been quite choppy. So if you look at the daily on the DAX, we talked about it this week, steady grind higher is still continuing. Still creating highs. So that's the first thing, right? So if you look at daily, you're still seeing highs continuously. You've got consolidation. We've taken highs. So now it's really all about, well, this 15,700, which we talked about this week gone by, has been pivotal, because every time we've come down, we've held above it, we've rallied back up into that 15,900, 16,000 level. Now, towards the end of the week, we've also had this to contend with, right? So we've got aggressive move last Friday into consolidation to start the week. Monday, we've broken down, come back up in to mitigate this area here around 16,000, multiple rejections here, here, and here. So we've done it on multiple days, Wednesday and Thursday. And we've also created new lows. So order flow is obviously something that's clearly very, very important, right? So you've got the low, high, low, high, low, high dynamic. And that is really your pivotal point here, right? So the order flow on the 1 hour is starting to give you a clue that this may be starting to change. And of course, what happens on Friday? Clear reaction again from 15,900. You could plot out the fibs in a moment, but we're getting that bearish close into the weekly underneath 15.9s and instigating the potential for bearish price action next week. So please do be aware of that one. Now, if we tie these back again and isolate most recent swing high to most recent swing low back into the retracement area on Friday, you will also see this playing out. Okay, so we've got a very, very nice reaction up here as well. Now, you can play 1 hour, 30 minutes. Me personally, I'm actually currently short on this, and I'm currently short off of this area here. So I got in around about 9.12, 9.15 on the entry, but again, very, very clear. And even as well on the 1 hour, even on the 30-minute charts here as well, lower high, lower high, lower high, lower low, new lower low, instigating bearish price action as well. So this one does look like it's going to move lower. So worth keeping a close eye on that one into Monday, Tuesday this week. So last week the week before last, we had 3 central banks, the Fed, the RBA, the ECB. Last week we've had inflation, and we've had, obviously, which come in less than expected, and we've had the Bank of England on Thursday. So interesting couple of weeks ahead, dynamic-wise, because a lot of the central banks and stuff out of the way, so we might actually start to see the technical side, the price action side becoming a little bit more apparent, rather than the chop and volatility associated with fundamentals and news and data. All right, so that's pretty much it for this week, everyone. Have a good weekend. Enjoy the weekend, lovely weather, and of course we will be back next week for another update into financial markets, and of course watching price action very, very closely. Enjoy your weekend.